Alright everyone, hope you are doing well. In today's video we are going to backtest a few trades on a strategy that I have shown on this channel. It's the orb with the 5-minute inverse fair value gap. So what we want to do, we are going to wait for the first 30 minutes to form on New York Open, and we are going to draw out the highs, and then we are going to draw out the lows for this strategy. So basically how it works, as soon as the 30 minutes has ended, so 9:30 until 10, this is going to happen, and then we're going to wait for a sweep either on the upside or the downside, and then we are going to wait for an inverse fair value gap to form. And as soon as that happens and we have a candle closure below the inverse fair value gap, we are going to enter our trades, and we are going to put our stops above or below the highs, and then we are going to target a 1 to 2 risk to reward trade, and we are going to take break even at a 1 to 1, where we're going to put our stops at break even. And that's how simple this strategy is. So let's have a look at a few examples and see how it goes. Alright, so as you can see, when 9:30 started, the indicator automatically pointed out is automatically starting with the highs and the lows. So here you can see on the time here at the bottom, it's 9:30, and then we're going to wait all the way for 10 o'clock for the first 30 minutes to finish of the New York Open. As you can see there, we have our first 30 minutes. What happened here as well, we had a sweep, so now we are going to wait for a fair value gap to be closed, and then we are going to target a 1 or 2 risk to reward trade. So at this moment, this is the first fair value gap. As you can see, there's a fair value gap right over here. For me, this is not a good one, so these are the few things you need to look out for. This fair value gap is in the middle of the range, so I won't necessarily take that one. I would look for something at a fair value gap either outside the range or more closer to the end of the ranges. But let's see what happens. So let's play price forward. We're continuing more down. There is no fair value gap created right over here. Let's play. Now you can see we left a fair value gap right over here. So this, I will make another video how we can use this type of entry to target to the upside. But for this one, we are just looking at a fair value gap. So this one, like I said, I won't necessarily take this one. We need a candle closure. This one is in the middle of the range. So if you entered this trade, your stops would be all the way here. So that's not worth it for me at all. It's way too far. So that's also a reason I won't take it. But let's see how it plays out. So now we've gone all the way up. We actually swept the top part, and let's just monitor. We have a fair value gap resting right over here as well. Let's draw that out. If we get a candle closure below, we are going to enter straight away. As you can see, we have a candle closure right over there, so we can actually enter our trade right over there. Stops just above these highs, and we can target a 1 till 2. Let's just get our break even point. Let's just mark that out as a break even, and then a fixed 1 till 2 risk to reward trade, and that will look something like that. So let's open 2 positions. So we're going to move our stops right over there. We're going to put our TP right over there, and let's see how price plays out. Going into the negative a little bit. There we go. We just want that break even. There we have our break even. So we can close one trade. And let's see if our 1 till 2 risk reward gets hit. And as you can see, there we have our 2 trades, one at break even. We moved our stops to break even, and there we have our second trade. Let's go to the next example. Alright, so here you can see at our next example, our new orb is forming. So let's wait till 10 o'clock. There we go. So there's our first 30 minutes. And immediately we swept the highs right over here. So now we wait for the first fair value gap to form. There's a really small fair value gap right over there. If we zoom in, you can clearly see this right over here. Extremely small. So that's our first fair value gap. Let's see if we get something else. There's a better one, and it's outside of the range. There's our small fair value gap. So if we get a closure below it, we can enter the trade immediately. And as you can see, we have a closure right there. We're going to enter our trade. We're going to put our stops just above these highs. Let's get our break even point quickly. So 1 till 1. So it's right over here. Break even. And then we're going to enter our trade. Let's enter 2 positions. We're going to put our stops right over there. We're going to put our TP right over there. And then as soon as we get break even, we're going to move our stops to break even. So let's see what happens. Playing around, playing around. There we go. We have our break even, so we can close one trade. We can move the rest to break even, and let's see if we get our 1 till 2 risk to reward right over here. And there you go. As you can see, we have our 2 trades right over there. All right, let's look at one more example. All right, so here is another example. So let's wait for the first 30 minutes to form. As you can see, we swept the highs, and immediately we have a big push up. So now we are going to wait for the last fair value gap to form. Where was that? There's not a fair value gap. There's a small fair value gap right over here. So if we get a closure below that one, we are going to enter our trade. I'll make another video on how we can enter on these moves and not an inverse fair value gap. So there we have our closure. So we can enter right over there. Stops above these highs. We can target our 1 till 1 as our break even. And then our full TP 1 till 2. We can enter the trade right over there. Stop loss right there. And your TP right over there. And let's see what happens. There we have our break even. So we can close one position. We can move our stops to break even. And then let's see if our next trade gets TP. Almost got out there at break even. Let's play forward. There we go. We got stopped out at break even. So let's play price forward and actually see what happened. As you can see there, it tanked down. So I want to show you an example quickly. Let's see if we can find one where we are not going to get a trade for that specific day. Alright, so here is a good example of a no trading day. You can see the first 30 minutes have formed. We took the lows. Price was just continuing down, down, down. There was no inverse fair value gap right over here for us to get into a trade and target to the upside. Then price came out of this again out of this again, and there was no opportunity for us to enter. So this initial breakthrough is the make or break. Basically, there was no inverse fair value gap that was formed where we had a closure to continue to the upside. And some days like this, there's not going to be a trade, and then some days you are just going to get a continuation where price never returns to the opposite direction, where you're just going to get fair value gap after fair value gap. Let's quickly see if we can find an example. So basically it will look something like this, where we have our orb and then price literally just continues before actually coming back the same day. Yes, later on it does come back, but where we get a continuation right over here. So sometimes this is going to happen, then you're not going to get a trade, and then also sometimes there's just not going to be an inverse fair value gap for you to enter your trade. So remember to go add orb algo flux charts to your trading chart. Here are the settings again. Also go check them out, link is in the description. They have some awesome price action toolkit like premium indicators that helps you a lot with price action trading. And then go check them out, and also please leave a like and subscribe, and then I'll see you in the next video. Cheers.